All right, guys. So we have Beach Bum Trading here with us. He's going to be doing a swing trading show today, and
Hey, John, can you hear me?
yeah, I can hear you fine. Chat.
Awesome.
Yeah, you should be able. They should be able to hear you. If I can hear you, you should.
Awesome.
They should be able to hear you too. All right, man. Well, hey, good luck today. Tough day in the market. Big crashes. So there might be some cheap stocks to buy up in swing trading today, and yeah, it should be a fun day, man. So yeah, go ahead and share your screen, and yeah, you can go ahead and get started.
Yeah, actually, this was a good day for a swing trading day. Usually, it's a lot more boring than it is.
Yeah,
And hello, fellow beginning traders. It's nice to talk to you again. And hopefully, you all are familiar with me from the chats, the daily live day trading chats, and hopefully some of the other videos I've done for John for beginner trading due diligence.
yeah, for sure. Yeah, it should be interesting, man. We got some extended moves on the downside now. Disney's at $95. And shout out to Beach because he was telling me that Disney might dip a little bit more a long time ago. And, you were right. And so interesting day. We got Redbox up there, EKSO, some penny stocks running. But like I said, today's a swing trading show. And so I won't take up too much of your time. I'll go ahead and add this to the stream, and then you can kind of put this one up if you want, or really probably that one's better. But yeah, guys, I'll let you guys enjoy the show with the real knowledgeable person here, which is Beach Bum. And yeah, you guys have a good day. Beach Bum, you should be able to end the stream just by clicking end broadcast. So yeah, just let me know, message me on Discord if you have any questions. And yeah, good luck today, guys.
Super. So again, as John mentioned, I primarily am a swing trader. I not really much of a day trader. It's rare that I do day trades. And I don't know how much y'all have been doing swing trading, how much you want to, know. So really, I'm open to, anything that you guys want to talk about. Please let me know in the chat. I'm watching the chat on another machine, so I'll try to keep up as best I can. Some of the real notable things I wanted to show you today, though, in terms of swing trades, is there was some excitement at 4 a.m. today. And I tend to get up at 4 a.m. I'm showing this is a Webull online version of Webull, which is my favorite trading platform. And again, one of the main reasons I like Webull is because you can start trading at 4 a.m. and all the way till 8 p.m. And a lot of times at 4 a.m., you'll get some nice irrational moves, gap up, gap down. So I wanted to show you this one in Yang. This was one right at 4 a.m. this morning. Yang is a short. It's an ETF that you can short the Chinese tech stocks. And the inverse of Yang is Yin, YINN. And these guys have been swinging back and forth. You've heard, China's reopening. Nope, they're closing back down. The Chinese party's clamping down. Oh, no, they're going to be accommodative. So this is a great swing. We went long back a couple days ago again. Somewhere down here when it bottomed. And again, this is a classic swing trade. And this is what we do is we look for something to come down to a support level, swing back up, break the VWAP. We go long, we ride it up. And so you see this big gap up at 4 a.m. So right at 4 a.m., this guy jumped way up. So yeah, we're making a nice profit on this already. And the other thing I wanted to show you that this is part of our swing trading strategy is throughout the day today, since 4 a.m., I've been steadily moving my stops up. So as it breaks one of these further resistance levels, I will move my stop up. Now, typically, I tend to stay 2 pivot points below where the current price action is. But in the case of an irrational move where I'm expecting a reversal like on the next day, and I've got a nice profit I want to protect, I'll probably stay 1 pivot point below. So as you can see, as it breaks through a pivot point, I move my stop up to just a penny below the previous pivot point. And the reason I go a penny or two below the pivot point is because the market makers have a tendency to see that order, and they're going to spike it down and hit your stop because they know most people put it right at the pivot point. So things like 52-week lows, support lines that you see in FinViz or somewhere else, the market makers kind of know that people tend to put their orders right there, and they'll go and spike it down to hit those stops. So I try to stay at least a little below. You can see Yang might be rolling over, which would be okay if it's going to reverse on me and hit my stop. You can see there's my stop at 1394 right now. If it does, I'll make a nice profit. And then if it goes and swings back down, we'll play this again. So that was an example. Now, another one I wanted to show you that was some of the excitement today is you saw the markets dump. And we've been watching VTI, which is the total market index. So this is on 4,000 stocks across all of the markets. And this is something that I play for a long-term swing or a long-term investment on the thesis that the market will eventually recover and go up. So, but I don't prescribe to passive trading. I'm much more of an active trader. And so I want to buy at the bottom and again swing it to the top. And then if it reverses and goes down, I'll cash out and pick it back up again. Well, we saw the market gap down again at 4 a.m. BTI had a nice gap down, and we're watching it at a previous support level, which was about 190.66. I already had my orders sitting. I had an order sitting in Webull that triggered right around 4 a.m. So we got one position in Webull close to 4 a.m. when it broke that line, which was great. And I hope I'm not babbling too much, but this is another reason why swing trading is great. If you're working a full-time job or you're in school a good portion of the day, you can still make money swing trading because you can put your order at a level that you're happy with and just kind of go to work. And if that order triggers at the level you said, yeah, I'd be happy buying BTI at 190, 191. Put your order in, you go to work, it triggers, and now your order's been filled, and you can adjust stops, etc. And again, if you get stopped out, you take your profit, etc. So you don't have to be watching the screens all day. I don't. My most active trading is really from 4 a.m. till about 10:30 a.m. And there's some pockets of time. Again, 4 a.m. you get gap up, gap downs. 7 o'clock, you get some other brokers come online. So you get the 7 a.m. scrum. You've probably heard John talk about the 7 a.m. scrum. So you get some activity around 7 a.m. You get some activity around 8 a.m. And then there's the open at 9:30. By 10:30, things usually have settled down quite a bit. And it's unusual unless something happens. I don't tend to take a lot of trades after that, and I don't take a lot of trades. A couple a day is a lot for us. A couple a week, a handful a week is pretty active in this kind of swing trading. Now today again was a very active day. We got 2 long positions in VTI, so I talked about the one that we opened in Webull that triggered, and then I had another one sitting in my Fidelity account, which is an old 401k retirement account. It's in a brokerage link that I can trade, and I had a very large order sitting there, but that doesn't activate till open. So right at open, that Fidelity good to cancel order that I had triggered, and I got a much larger position in VTI. So you can see we're long VTI. You can see it looks like it's starting to turn back up. But again, this is a long-term investment. So if you're looking at, long-term swings, long-term investments, VTI is one we recommend. Now, as John will state as well, we're not financial advisors. This is education and training only, and our goal is to help you be successful in your trading. So we want to hear, how can we help you be successful in your trading? And I see Moogle is asking, do you ever do quick trades based on news headlines? Very rarely. Very, very rarely do I, again, day trade or chase things based on news, etc. I'm just not that nimble. That's, other people are more nimble than I am. I would like to learn to be more nimble when these things roll over. We were talking about Yang, and these pairs, when this guy comes down and breaks the VWAP and comes down and hits my stop, it'd be nice to flip that and go long on yen, because that says, hey, this reversed. You don't want to short Chinese stocks now you want long Chinese stocks. And so if I were nimble enough, right when that stop hits, I could go long yen, because now we know that yen has now broken its VWAP and it's headed up. So that's something I'm looking at trying to improve, be better at, is flipping these inverse pairs, and there's a bunch of them that we trade. This happens to be Chinese tech stocks. Another one that's performing very well today is DRIP, which is the short on oil. It's a short on oil companies. Emerging market ETFs, Walter, that's a really good question. I do have a long position in an ETF. It's SDIV, pays a dividend. It's down. It's been down for quite a while. But we're just holding it and collecting the dividend, and that is our long play on emerging markets is SDIV. I know there are other ETFs. I haven't spent a lot of time in that area yet, but that is an area if they are recovering, although, global recession is going to, and it is hitting everything. So predictions for this company's earnings. And I don't know what company that is, but so I was talking about DRIP. DRIP is, again, the short on oil companies, and you see it had a nice run. It's up 12.7% today. Looks like it might be rolling over, and the inverse of DRIP is Gush. So again, if you want to short oil, you can go DRIP. It's making a nice profit today. If you want a long oil, it's Gush. And similarly on natural gas, the short on natural gas companies is Cold. You can see it's also up 6% right now. And the inverse of Cold, if this is to short natural gas, if you want a long natural gas, it's Boil. Now, again, these are on the companies themselves. If you want to use a more direct ETF to short the actual natural gas price, there's one UNG is on the natural gas price. You can long natural gas using UNG. And similarly, the long on oil is UCO and the short on oil is SCO. And those are on the WTI price of oil. And I'll show you briefly, and I'll take a look at the chat while I bring this up. The other thing I typically look at a lot during the day is there's a commodity screen and an index screen in investing.com. And just for your information, I keep all the links to the tools, etc., that I typically use. This is our homepage, beachbumtrading.com, bum without the U. And if you go down here to the links section, like I said, I keep all my trading platforms, my trading tools. So I've got quick access to FinBiz, and now I want to click on investing.com and we'll bring this up. I use this site for all kinds of stuff. You can get the economic news as it comes out by looking at the economic calendar. And I guess since I'm here, we'll just take a real quick look at that. And then we saw on the right, this is the chart I was talking about, that I have this up on another machine pretty much all the time. And we can see all the major indexes. So we can see Dow, S&P, NASDAQ are all down. You see the VIX is popping up, and I'll talk about the VIX in a minute, and trading volatility, because that's another exciting area today. But again, if you go to economic calendar, you can see the economic news for the day. So we see this gold index was a little bit better than expected. We can see what's coming up for the week. And again, this is where we're going to see the FOMC meeting on Wednesday. We can see the PPI data tomorrow, what time it is. And when they report, they will put the actuals and usually tag it red or green, whether it was better than expected or worse than expected. So again, I use this heavily for planning our strategies for the week, and also for reporting on the economic data. So, and again, this chart here is the one I minimize and keep up on another machine, and I'm watching this daily. Right now, I'm watching the curve on the VIX. I'm waiting for it to spike, and I'll show you why in just a second, because I have another set of orders on SVXY, which is the short on the VIX, waiting to catch the peak in the VIX so I can short the VIX back down. And we'll take a look at that in a second. You can also flip over here, and you can quickly see the prices on all the major commodities and the charts. So again, I typically watch this to see, okay, right now natural gas, it rolled over. It looks like it's bouncing. We can see oil's at 119. We see gold, silver down big today. Really, as I was mentioning in the chat earlier, um, with everyone, is this is just a panic sell, risk off. They're selling everything. They're selling stocks, they're selling bonds, they're selling all the commodities. There's really no logic to it. It's just a risk. They're selling crypto. It's just panic, risk off, sell everything, which is that's a panic sell. If it were strictly a risk off day and not a panic sell, you'd typically see stocks down, bonds up, because that's the mutual fund algorithm, right? Risk off, sell stocks, buy bonds. And that's doesn't make any sense either lately, but that's what they've been doing. And we'll look at that in a second in FinViz, how we can see that. But again, this is investing.com, great resource. I have no affiliation with them, not making any money if you use it. Or from the link, it's just a great resource that I use heavily. So I hope that helps. So since I was talking about the futures, well, there's another resource I use heavily, SpinViz. I use this for due diligence. I use this for tracking the markets, etc., putting together our weekly trading game plans. We can see where the market is right now. I'm going to refresh it a sec. So we can see everything's red and everybody's down 3%. You can see who the biggest gainers are. I know John and Carol were talking about Dawn and what's going on with Dawn. So we can see it popped up. And so we can see the top runners, the biggest losers. We see news. I like this, being able to see the most current news. So it's all about the Fed. And again, just my opinion. Couple things happen on Mondays from a swing trading. I know from your day trading stuff, you're looking for gappers and runners pretty much every day. Monday for swings tends to be more volatile. You have the long weekend, so you tend to have increased volatility on Mondays and panic selling, etc. Yeah, particularly if something happens over the weekend. So that's something to be aware of, especially with trading volatility. And in a minute, I want to talk about trading volatility. So we can also take a quick look at some of the futures here. So we can see oil's bouncing up, natural gas is rolling over right now, gold's down. And we can look at all the charts and we can see the treasuries are inverted. So that's, again, another danger sign for recession. That's one of the main things. They look at the 10s versus 2s, and we'll look at that in a second in the futures. But essentially, it's the yield curves are inverted, and you'll hear that repeatedly as a sign of a potential recession. Some other nice things in FinViz. You can look at cryptos, and there's a heat map version. We see they're all down. See Ethereum's down 10%, Bitcoin's down 9%, and you could also look at the charts. So again, risk off, they're dumping everything. And we can look at the futures. And again, I use this futures chart. This is another one I typically have up during the day, all day long. Because I want to see which direction the markets are going. We could see, okay, big bear market. We can see it's making lower lows. So markets are going down. We've been saying since January that this was a bear market, a descending market, and trying to help traders be able to trade, make money. Bears make money too. And there's plenty of ways to make money in a bear market, just like in a bull market. Our philosophy is you can make money in any market. It's just a matter of setting your mindset, knowing what the trend is. Is it a bear market or bull market? Are we going down? Are we going up? And trading accordingly. Even in a choppy flat market like we were last week, you can see these swings back and forth. That gives us opportunities. If we're chopping back and forth and it's reasonably predictable until that trend breaks, we can trade it when swing from the bottom to the top, short coming down, swing back up to the top, etc. So I hope that's helping. Like I said, I'm trying to keep an eye on the chat. Yeah, definitely a big panic day. Yeah, I think, and I agree, Walter. I think that's what it was. Is I think people knew there was going to be a panic around the Fed meeting, and I think some of the people wanted to front run that panic, and so they're selling today, and a lot of other people are following, and so we're seeing this, real dump. And as I put in the chat earlier, I'm hoping that this is the capitulation that could mark our bottom. To get a real good bottom, we need a good capitulation where all the sellers that are going to sell have sold. And then the buyers could step in and start buying. And then, a day or so later, the talking heads on the TV will come out and say, yes, we hit a bottom. It's hard to see the bottom before it happens, but after the fact, it's pretty easy to see that capitulation and say, yep, that was probably the bottom. So unless something else happens. So again, these charts I think are great. We see the VIX popping up, and I'm waiting for it. Right now, the VIX is sitting at 33.59, and SVXY is sitting at 46.16, and I'm waiting for it to come down to 45.21 and hit my buy orders. So I'm watching that intently on another machine, but I already have my buy orders placed. So it's just a matter of they're going to hit. When it crosses that line, I'm going to get an alert from Thinkorswim, which I'm running on another machine. And it's going to tell me my buy orders have triggered, and I have my position, and then I will go and post that out in our social media, etc. Say, okay, yeah, we're now long SVXY again, which means we're shorting the VIX. That's probably my absolute favorite trade, is shorting the VIX, because by its definition, it reverts to its mean. So again, by definition, it's going to come down eventually. So eventually I'm going to make money. It's almost a guarantee. It's almost the best guarantee trade you can get, is shorting the VIX from a very high point. Now it can go a lot higher. It could go to 80. It could go to 100, but eventually it's going to come down. And that's again part of my philosophy, is I'm here to make money. Um, I can wait to make money, especially if I think the probability is high. So I don't worry about that. That's like our shorts on oil, is we shorted it much earlier at a lower price, probably $90. No, it's probably when it hit 100. We shorted oil, and then it went to 120, it went to 130, etc. So yeah, those positions are underwater, but eventually oil is going to come down. So I don't really worry about that. Do I think the Fed meeting is mostly priced in? I would have said yes a couple weeks ago, before they started talking about a 0.75 or a whole point interest rate hike. At this point, I think there's more uncertainty now, and that's why I think you're seeing the market reaction the way it is. Everyone was pretty confident we'd get a 0.5 in June, 0.5 in July, and then let's see. And I think now they think we might get a 0.75 or maybe even 100 basis point on Wednesday, and nobody knows. And Powell might say something else that's going to shock the market. So I think that's why we're seeing this dump today, is that level of uncertainty. Yeah, Walter, the two ones that I use for shorting oil is DRIP, which is on the oil companies, or SCO, which is on the actual WTI price. Now, I tend to prefer DRIP, and I'll try to bring this up and see if I can show the spreadsheet that I use for comparing ETFs. It'll probably take a few minutes to get it to load, but I know Tanvir. I don't know if Tanvir's here. I haven't didn't catch his name in the chat, but he was asking about metals ETFs as well. So I can see if I can get that guy to load while we go back over here. So gold and silver, we see dumping too. Again, I think that's irrational. Gold and silver are your inflation hedges, your store of value, etc. So if we're going to keep having 8%, 9% inflation for the extended future, I'm surprised we're seeing this exodus out of gold and silver. But again, that's just a risk off, sell everything day. We see copper dumping too, and that's kind of a recessionary play. not sure what MRO is. I'd have to bring it up in FinBiz. Just also, I think it was Tanbeer. Someone was asking yesterday about wheat. Wheat, WEAT. WEAT is an ETF that you can use to long wheat. But as we can see, it's kind of sitting in the middle of its range. So I wasn't okay. Marathon Oil, individual. One of the reasons I like the ETFs is they're not as sensitive to individual companies or individual company risks, and also I can short. Most of my money is sitting in retirement accounts. I do have some cash accounts. I can day trade in them. But the majority of my money is sitting in retirement accounts, and I cannot short individual stocks. So I have to short using ETFs in those retirement accounts. So that's one of the reasons I like to use the ETFs. But again, the other is they're not as sensitive to an individual stock. Now, your risk reward with an individual stock may be better than the ETF, right? If Marathon Oil is outperforming the industry, then it's going to outperform the ETF. So that may be an opportunity, and you can do both, right? You can, if I want a long oil, I can long oil with Gush or UCO. And then if I think Marathon is better than the average oil company, then I can also buy Marathon Oil. Or if I think they're worse, I could short Marathon Oil. So I'll look at that in a second. Let's look at the bonds. We see the bonds are dumping, and that's why I was saying, again, this is a general risk off day. Is normally stocks and bonds don't drop at the same time, but sometimes they do. And this is, I won't babble about 401ks and mutual funds, but I don't recommend mutual funds. So, and one of these days, if you want to hear me go on my soapbox about mutual funds, I could do that if you really want to hear it. So we could also see the US dollars really spiking up, attempting to break its high, and that's probably what's driving a lot of the commodity prices down. Is when the US dollar goes up, most of the commodities, silver, gold, oil, etc., are priced in US dollars, and therefore it drives their prices down. So again, you can see how these things are linked, and by seeing these trends, you can position accordingly. Say, oh, the dollar's going up, that means commodities are probably going to go down, so I could probably short commodities. I don't currently Forex trade, but a while ago I saw this correlation with the yen, and I really thought that looked attractive. I don't know if John ever got into Forex trading, but that looked like a juicy opportunity a while back. So is Marathon Oil MRO? Or is it MO? It's MRO. So I don't know if y'all typically use FinViz. Again, I think FinViz is great. Another thing I like is the way they automatically draw support and resistance lines. So again, we could see there's this nice pivot point right there. We could see it's dumping. It's threatening to break out of an ascending trend. So I would say Marathon Oil's at risk. It's a little above its average. So again, we can see there's its 50-day moving average. So it's breaking that trend line. It'll probably test that moving average. Now, if it bounces, then you're okay. If it breaks that moving average, it's got this pivot point at 25. If it breaks down there, then, it's going to go down to the next level of support, which could be around 20-ish, right? But the fact it's broken out of that channel, it's going to be at high risk at that point. So I hope that answers that question. So let me spin up in the chat a second, and I'll flip back to the home page in FinViz for a sec. Let me catch up with the chat and see if I can answer any other specific questions. And no, Walter, you didn't hear anything. Okay. So yeah, if you want to talk about specific ones, we could take a look. Again, I don't know how much babble you guys want to hear about, how long we've been trading and where we came from, and we did come up and grew a small account, so we've been trading for about a decade. I have a partner. I do most of the trading. She does some of the research. She does some of the graphics, etc., for our sites, etc. So you'll probably never hear her on stream unless I need to take a break, but we'll see. So the other one I wanted to talk about is SVXY. Let's go to my watch list. So another nice feature in Webull is every week I build a set of watch lists. And what I do is, again, we're talking about swing trading, longer term, more position. Again, if you're going to be at work or you're not going to be watching, I want to know, okay, what specifics, and I want to focus. What am I going to watch specifically for this week based on the trends, the strategies, the themes? I don't know, it's the stories. You all are probably familiar with Mitch. I know John talks about Money Mitch from Benzinga, and his handle Story Investors. I like Mitch. I like the stories too. Even if we don't always agree on what the story is, that's kind of our position. Like we talked about, you know, eventually oil's going to go down. What's going on with China? What do we think? What's going on with inflation? How do you inflation-proof your portfolio? How do you recession-proof your portfolio? So based on all that data, we build our watch list, and here's our watch list. And one of the nice things in Webull is you can see, okay, who's way up, who's way down. So if I'm trying to buy at a bottom, I could see we saw this yen is bottoming. So that means that yang is topping. So the other one's SVXY I wanted to take a look at. That is the short on the VIX. And you can see there's my price target, there's my orders, and I'm just waiting for those to trigger. And we see this big gap down. So the VIX really spiked up right at 4 a.m. And that told me, okay, I need to watch SVXY, make sure my orders are ready, put it up on my watch screen, which I have on Thinkorswim on another machine. So I can watch that closely if I want to. But I don't have to because I've already got my orders set. Another one that's interesting I want to show you real quick is we have another set of another watch list. You can create multiple watch lists in Webull, which again I think is great. So that was our real-time watch list, the ones we watch, real-time during the day. Those are our primary focus. Then at the end of the day, I have a bullpen, and these were ones that had attractive setups, but they weren't quite at a support level yet. But they were approaching it, and based on their fundamentals, etc., I want to go and look at them at the end of the day and see if their setup is more attractive. Well, one of the ones we heard about recently and thought was potentially interesting was Ford. And actually, this is one Money Mitch pointed out the other day. And so we put it in our bullpen, and then today Ford was just dumping not long ago. Yes, Mughal, we added Bud, Anheuser-Busch, to our watch list this week, having cannabis stocks. They're a nice swing. They're a long-term swing, and right now I think they're going down. They're bottoming. We've made some good money on cannabis. Again, that's a longer-term swing. And so when it does bottom and turn up, there's an ETF, MJ. We've made money on ACB before. I don't know if we traded Tilray, but I have a number of them that we watch. But I think right now cannabis going down. We could look at MJ real quick. Okay, so here's another watch list I have, which is all the ETFs that I think are interesting. I put in a watch list of ETFs so I can very quickly flip over and say, okay, where's MJ? And we can zoom out. So it's going down. So cannabis is going down. And we can zoom all the way out to a year. It's, at a year bottom, it's going down. So until it bottoms and turns back up, I'm not really looking at cannabis. So, and yes, we have bud. We think bud is interesting. I think it's on our primary watch list this week. When we've traded bud in the past, um, Bud pays a dividend. It usually we would catch Bud on a irrational dump on an earnings report. They would miss earnings or say something bad in earnings, and it would dump, and we would buy it. That's another one of our strategies is irrational reactions to earnings. And if I see or hear what I feel is irrational, um, then we will go ahead and long or short based on that irrational move. Now, again, I typically can't short individual stocks, or I don't. I actually have never done that, shorted an individual stock. I'd like to learn how, but I'm so busy doing everything else. So we can look at Bud. Again, you see how it bounced the other day? I really liked the way it came down to a previous support line, which is about 51.45, and then it bounced very quickly. And you see it's doing that again. So it's kind of bouncing off that 51.45. So yeah, I like Bud. I still like Bud. It's consumer defensive, so it's relatively inflation and recession proof because they can raise the prices. And in reality, when the economy's bad, people drink as much or more beer. There's certain things, your sin stocks or whatever that are relatively recession proof, and they're also a good hedge on inflation because they can just raise the prices and people will continue to buy them like the other consumer defensive. So excuse me for just a sec. I want to cough. Okay, so I was talking about trading volatility. Yeah, alcohol not a bad, but yes, agreed. There was a whiskey stock. I think it was bourbon or whiskey that really did. I forget their name. Is that the one? BG. I don't know what BGXX. There's a BW or something like that that did really well recently, and it was like a whiskey or bourbon or something like that. So, okay, so let's see if I could answer that question. We were talking about oil, and please remind me if I missed the question, but we were talking about ETFs to long and short oil. This is a spreadsheet where uh, I do a comparison of the various ETFs that play on a various commodity to be able to long or short. Again, this is for my quick reference. So if I see, hey, oil's going up real fast and I want to long it, what ETF do I pick? Or if I want to short it, what ETF do I pick? Um, Again, I might have specific companies. For example, we own quite a few gold and silver miners, as well as the GLDI, which is my favorite ETF on gold, SLVO, my favorite ETF. The reason I like those are actually ETNs, and they pay monthly dividends. So even if they're below where I bought them, I'm still making money because they're paying me a monthly dividend. And eventually, when gold goes back to 2000, I'll sell it and wait for it to come back down. And we played this several times. We swing those guys all the time. And just when it peaks out, and that's the concept behind swing trading, right? Buy at the bottom, sell at the top. And it's really buy at support, sell at resistance, or sell at resistance, buy at support if you're shorting. That's basically the concept. So that's why you see, and I'll babble about the lines, etc., in a minute as well. So I'm trying to keep an eye on some of the chat too. So again, there was a question, what do I use to short oil? Well, again, if I want to short oil and gas companies, I use DRIP. If I want to short WTI, I use SCO. If I want a long, I've got 3 of them. Gush is the inverse of drip, UCO is the inverse of SCO, and then there's another ETN, a Credit Suisse ETN like GLDI and SLVO, which is USOI. So that's one where you can long crude oil and get paid a monthly dividend. So you play it the same way. I tried to catch that when oil was, at a relative bottom, and then oil took off and I couldn't catch it. So I don't have a position in USOI, but when oil comes back down, that's what I'll do, is I'll buy a big chunk of USOI and hold on to it and collect monthly dividends till oil swings back up. So it's a nice thing about all these commodities, and this is why we do a lot of swing trading of commodities, is they tend to be very cyclical with supply and demand. So they cycle over some period of time, and again, oil it could go up to what, 150, 175, 200, but it's going to come back down, because then they're going to increase supply, demand's going to diminish, they call it demand destruction, and then it's going to come down. So eventually your position's going to be profitable. You just have to be very patient. That's another thing you guys have probably heard me say, seen me put in the chats, is patience, PATIENCE, pays. So I spell patience as pay. Because swing trading requires a lot of patience, and you also see I say intestinal fortitude, because sometimes you have to endure your position being very red for a very long time, with the knowledge that, okay, your thesis, if you're holding on to your thesis that, yeah, oil's eventually going to come back down, eventually you're going to be profitable if you're patient and able to do that. So I'm not currently sharing this spreadsheet yet. I have some work to do on it. I share it on, the stream. I could show you, but I'm currently not sharing this. Eventually I might, but again, I have some work to do on it. This was, again, something that I use pretty heavily to look up. So if somebody says, okay, well, what do you use for, for example, the NASDAQ, to short the NASDAQ? Well, it's SQQQ, semiconductors, the pairs SOXS to short, SOXL to long. And then you'll see I have risk reward profiles, and it tells me which one, if I want to, buy silver, which one gives me the best risk reward. So here's one, if you want a 2x long silver, you can use AGQ. Here's why I'm buying, VTI, because VTI has a little bit better risk reward than VT, which is the total world. And I had VOO somewhere in here too. So right there. Cool. So I still haven't seen Tanvir. He was asking, I know, about the precious metals. I think we talked about GLDI. Here's some to short. You can use Dust, which is a short 2x on the gold miners. There's DZZ, double short ETN on gold. If you want a long micro gold miners to long, it's GDXU. There's another 2x long UGL. That's silver, similarly. If you want short, there's only one, I believe, ZSL. And then we talked about AGQ. Again, that's the one I like, SLVO, to hold for any length of time. Yeah, Walter, I've got a long history of making spreadsheets and databases, and I won't bore y'all. Yeah, really, I need to make it more, into a database where it's more automated. That's part of the problem, is it's too much work to maintain right now, and I need it to be more automated. Fortunately, Douglas PC pointed out that there are some Google Finance functions that you can use to automatically get like the 52-week high and low values, and I'd like to be able to implement that in that spreadsheet, some of my others, so that they automatically update. So that would be very helpful, because right now I manually have to update the 52-week high and low, and it's time consuming. But again, that way I have a quick reference that says if I see, if we're looking at, so we'll flip back over here and let's go to the other market. Okay, market. Typically, I can go to major indexes or index futures. Usually, pre-market, I look at index futures, and then once the market opens, I look at major indices. So here again, you could see even all the global indices, and then we see the smaller table. So we see how the market's doing very quickly. So if we saw, okay, NASDAQ's dumping or whatever, then I know what ETF I want. If we see oil, well, look at that, oil's popping. If oil hits 130, I'm going to short it. I'm going to scalp it with drip. So that's our plan. That's why we have it on our watch list. I have a longer position in drip already at a lower price, below 100. But if drip hits, or if oil hits 130 or above, wherever it peaks and rolls over, which means drip should bottom and turn up, then I will go along another big chunk of drip and ride oil back down. Because I don't know if y'all remember, a couple years ago, oil went negative. So they were paying people to take oil, and now they're charging, $130 a barrel for it. So that's how severe some of these swings can be. Natural gas, it hit 960 the other last week. We made a real nice profit because we put an order in with cold at that peak, and they triggered when nat gas went to about 960. We wrote it down, and when colds, rolled over, stopped us out, we took our profit. If natural gas goes up there again, we'll do the exact same thing. And that's, again, the concept of swing trading, scalping. Now, time frames for swing trading, the type of trading we do is, days, weeks, months. It's not intraday. So this is not typically day trading. It's holding positions for, like I said, days, weeks, months. Yeah, I've had them for years. So I still have some. I've got some bags, and we can talk about that. And that's okay. Um, Eventually, if I thought they were total losses, or they went out of business or whatever, then I'd cash, write them off, take my loss, and walk away. But as long as there's still what I think there's an opportunity, I don't need the money right now, so I can hold on to it. So again, I don't want to babble too much. I'll watch the chat and see if you guys have some questions while I babble at you. Um, but one of the things I would like to help people with is to find the style of trading that best fits their personality, because I believe that that's what you're going to be most successful for. If day trading is the best type of trading for your personality, then that's probably what you should do. If that doesn't fit your personality, then that's probably not going to be the best type of trading for you. Some people can't stand to see the red in their portfolio, and therefore long-term swing trading and long-term buy and hold investing might not be great because it keeps them up at night, the red. And therefore day trading, being in cash at the end of every day, lets them sleep better at night, which is great. That's the thing to do. So I believe if you're just starting out trading, I would focus on figuring out what type of trading best fits your personality, because I truly believe that you will be most successful at styles of trading that best fit your personality. So I'd love to hear, in the chat what you all think about that. If you agree, disagree, tell us what types of trades best fit your personality and why. What are the characteristics that make a great day trader? What are the characteristics that make a great swing trader? As I said, I mentioned patience for swing trading. I believe it's patience and intestinal fortitude. So Okay, so we could see the markets tried to make a little bit of a rebound. It doesn't look like they're having a whole lot of luck. They're still down 3 to 4%. VIX is still sitting at 33.29. Still a lot of downward pressure. Still a lot of red. What is the news? Fed walking a tightrope. Yeah. They keep saying it's on track to enter a bear market. I've been saying for quite a while it's in a bear market. I guess technically they keep using that 20% down number. In my opinion, if you're making lower highs, lower lows, it's a descending market. Again, I called it a bearish market for a while, and then when the talking heads finally agreed with me that it was a bear market, now we agree it's a bear market. And the reason I think that's important is, the strategies once you realize, okay, this is a bear market. So instead of you buy the dips in a bull market, you sell the rips in a bear market. Instead of buying at support in a bull market, you sell at resistance in a bear market. I did a long time ago. I did a game plan. We talked about, flip the charts, flip your mindset. So if you're having trouble playing it down, shorting at resistance and then stopping out at support, which is the inverse of what you would do in a bull market. If you have trouble in that, flip the chart over. And then it looks the same as you were longing in a bull market. Now you're doing the same thing, but you're shorting in a bear market. Swing look the same. The head and shoulders strategies, again, it's just an inverse. It's you flip your mindset, flip the charts, if that's what you need to do. But again, that's important because you don't want to be fighting the trend. They say don't fight the Fed, don't fight the tape. Don't fight the trend, and the trend is down. So play it down. We make money in any kind of market. Again, that's another important thing. I hope traders will realize, and it will help them be successful. Is you can make money in any kind of market. Right now, we've got volatility. You can make money longing and shorting volatility. We've got volatility in the commodities. There's money to be made. Like I said, if oil hits up over 130, I'm going to short it with an additional scalp trade using drip. Maybe SCO, but probably drip. So again, nice thing with this chart on investing.com is you can see if you hover over any of the entries, you can see the chart. So we could see oil spiking up. So that's typically what I do is on another machine, I've got it sitting there hovered on whatever one I want to look at. If I'm looking at oil, okay, we can see, okay, oil spiking up. Nat gas bounced at bottom and bounced. I want to see what's going on with the VIX. Okay, so it hit high and retraced a little bit. And I can see my SVXY is right now it's at 46.19. I want it at 45.21. Show you another one I'm watching that I like. It's a REIT. We've got a couple REITs on our watch list. I should have O. It's probably in the bullpen. They're probably both in the bullpen right now. Oh, you'll hear this one talked about a lot for long-term investments, fixed income, etc. It's Realty Income. It's a REIT. They pay monthly dividend. We've swung this guy and held it over and over. Again, it pays a nice monthly dividend. They're a dividend aristocrat. They've increased their dividend for years. And the other thing I like about it is it has a nice cycle. So if we zoom out a little bit, let's go out 3 months. So see how this guy tends to bottom, then he goes up in the high 60s, low 70s, and he comes back down. So when he comes back down, I'm going to buy him again. I'm going to ride him up here, collect my dividends until he gets up to the top, and then I'll sell him and do it again. And typically put this in the Fidelity account just because it's a long-term dividend type play. But I believe you could also sell covered calls against these positions. So that's another concept with swing trading. Is since you're holding positions for longer periods of time, days, weeks, months, etc., even if your position's underwater, what you could do is sell covered calls against that position, and you can generate regular income by selling covered calls against that position. So it helps to know which positions are optionable. So in FinViz, it will tell you if a given symbol is optionable. It'll also tell you if it's shortable, if it pays a dividend, etc. And it's kind of nice if it is optionable and you can buy lots of 100 shares because you need 100 shares for each covered call you sell. Then you can go ahead and sell covered calls against it. And as I said, again, you're generating your own monthly income selling covered call. You can even sell weeklies. I typically sell monthlies or a couple months out. I recently sold one against our position in DRIP that's underwater, and I made good money. And if DRIP goes back down, I'll buy it back much cheaper, pocket the difference, and then I'll sell it again. So again, you can sit there and generate your own money with these guys, and that's a good strategy, particularly if we're in that choppy market and it's just kind of bouncing back and forth. Nobody's really going anywhere. You can't take profits on anything. And it's not good to buy anything new. You just sit there and sell and buy back covered calls and pocket the money. So this is another REIT that we're watching. Again, it's in our bullpen, but it plummeted today. We'll look at the short term. It really took a dive today. So we can see it fell way off today. We have a position in Stag. Stag is a realty investment, real estate investment trust, which is what a REIT is they buy real estate, and part of their structure is that they have to pay out, I believe it's 90% of their profits as a dividend. So they typically pay a nice monthly dividend. And I don't like all REITs. I'm staying away from mortgage-backed REITs because I think I know the housing market's rolling over. In fact, there's an ETF called DRV, which I got an alert that said it was up 10% today, which again just reaffirms the notion that the residential housing market's rolling over. But this guy's on industrial real estate. So they own warehouses and distribution centers and the things that support the supply chain. And we know with all the disruptions in the supply chain, there's no lack of need for distribution centers, warehouses, etc. I think when Amazon came out and said they had excess capacity in their distribution buildings, real estate, etc. I think that's what triggered the downslide in Stag. But again, we have a position, but if it comes down here in the 29 range, I'll probably buy another block of Stag, and then I can just hold it, collect the monthly dividends, ride out this recession, and eventually, if it goes back up, I'll just sell it. You can see it peaks way up in the 43s, so it's got a nice risk-reward profile. So I hope that helps. So we've been going about an hour. I'll hold up for a minute and see if you guys have any questions. See if I can answer any questions. Again, I'm happy to talk about anything y'all want to. Again, my focus tends to be swing trading. So I listen to John's channel every day. I would like to. Again, day trading is just not I've learned. I'm just not good at day trading. I'm not nimble enough. It's not my personality. I suffer from a paralysis by analysis. So by the time I see one of these runners, it's already run away, and I don't like it because then I'm also a cheapskate. So I feel like I'm paying too much. If it's far away from a support level, I don't chase stuff. So there's always something to trade. So I just never feel the need to to chase something. I just go find something that looks better. So I would like to learn to be more nimble, particularly in these pairs types of opportunities, because I think I'm leaving a lot of money on the table. Not flipping those guys when it hits my stop, I really should go and go long the other version. So like with we talked about volatility, if I get my short on the VIX and I ride it down when the VIX bottoms at 20 or 16 or whatever, then I would buy UVXY and vice versa. I should be riding the VIX up right now with UVXY, and then flip it to SVXY when it peaks. But I'm not long UVXY right now. It's just I have a hard time chasing things that are running. So. Keenan. I have quite a few other videos about how to read like FinViz, the various FinViz charts. In fact, we can flip over and look at industries real quick because I think that's probably interesting as well. But I'm not as much of a technical. You can see I use technical analysis, and I'm using the support and pivot levels that are already available in the tools. So I use them in Webull. It's super easy to set pivot points on a Webull is you just go to indicators and check on pivot points. I've got pivot points of VWAP. That's all I'm using in Webull. I've also got pivot points and several, I've got VWAP and a couple other exponential moving averages and thinkorswim. And then you can see FinViz also has, nice support levels already drawn. I just don't consider myself all that much of a technical analyst. So I haven't spent a lot of time on that type of thing. I think John's VWAP strategies are great, and I think they work just as well in a longer time frame. In fact, I've mentioned several times, I think that would be a great strategy for things like the VIX using the SVXY, UVXY, even some of the others. I think that VWAP strategies would work equally well on a swing trade basis. So I was going to just quickly look at the sectors, and then I'll probably ping John since, like I said, we're going on about an hour. Now we see everything's red. The worst is cyclicals. Consumer defensives is the least bad today. Utilities, and we've been talking about this for weeks. Is the strongest are consumer defensive, energy, and utilities right now, and basic materials. So if we kind of zoom out to a monthly view, we can see those three sectors have been the strongest for quite some time: energy, basic materials, utilities. So if you're looking for something to long, those would be the areas that have the best potential for holding up. The worst is technology. It's very volatile. It flips back and forth. As you see the NASDAQ, some of the others, the cyclicals, or anything that's just consumer discretionary is, in my opinion, at high risk. And then I do have a video on how to read all of this and how to use it and how to drill down to see the individual stocks and etc. So we see the least bad is beverages. So, that's Bud's holding up, and it's not doing too bad today. Insurance, shell companies. So at the very bottom, okay, so again, all the commodities, and I think that's the dollar strength is pushing those. I don't think that's going to hold up. So again, this may be a buying opportunity. If you're looking to get into that gold or silver ETNs, collect some money, get a uranium swing. I've got some that we were watching that had already run up. There's LEU, DNN, URNM is the ETF on uranium. There's some others as well. So the month we could see, okay, so energy has been the theme for the month. I know Mitch really likes BTU, coal. He talks about that a lot. Solar has been doing well, obviously oil and gas. So energy's been the strong play, and basic materials. So And then we see real estate, some real estate. So that goes to the REITs that we were talking about. And again, there's all kinds of information you can see in these tabs. And like I said, I do have a video um, that goes over all those tabs, how you can use them. So please let me know if you have any other further questions. Otherwise, I'm going to ping John. Please smash the like button if you're not already subscribed to the Beginner Trading YouTube channel. We hope that you'll choose to do so. Also, just to plug our YouTube channel, you can see it's Beach Bum Trading. I'll bring it up. And again, our home page is beachbumtrading.com, bum without the U. And you can find us on social media. All the links for all these tools, etc., the trading platforms. I always put all my links here so I could just very quickly and easily access all my sites from the links. You can also see here's a bunch of our videos. They get posted on our homepage as well. So you can also hit me up in the Beginner Trading Discord. I'm there quite often. So, and I'm just Beach Bum Trading. I'm pretty much Beach Bum Trading anywhere. The only place, there's a few places like our URL. I couldn't get that. I had to take the U out because somebody already had it. So, well, thank you, Suburban Viking Creed. I'm glad. Yeah, please give me feedback. This is our first kind of live stream. Tell me what you want to hear more about, less about. I try to be very adaptive. So if I don't know something, I'll tell you, and maybe I'll learn it. But okay, I'm just letting John know. So, and again, here's our YouTube channel, and we hope you'll also choose to subscribe there. We do again, it's primarily swing trading, longer term. I try to do videos with kind of educational, instructional videos, due diligence. Like the ones I've done a couple for John for beginner trading. Like I think we did Disney, Facebook, Apple. I think those are the ones that I did for John. If you would like to see a due diligence video on a particular stock, just let me know. I'm happy to do that. So again, let us know how we can improve, and we will do so. I'm going to wrap up now. And again, if you have any other questions, etc., hit me up in the Beginner Trading Discord or on our social media, etc. So thank you all for your participation. Please hit the like button. Please subscribe to the Beginner Trading YouTube channel if you haven't already. And please let John know if you want, if you want more shows from me like this or on other topics from me, please let John know what you would like, how often, what times, etc. And we'll see what we can do. Okay. And good luck and have a great day.
All right, guys. We'll see you guys next time.